Hello everyone, this is Jay, and today we're going to take a look at both of my portfolios to see which stocks am I going to be buying today as a DCA investor. But before we do that, I want to take a look at two picks, one from each super investor's Q2 announcement, and these two super investors are Warren Buffett and Bill Ackman. And I want to take a look at two new additions that they added into their portfolios, one into each portfolio. And I'm interested in seeing and reviewing both of those companies very quickly. But let's go first into my weekly challenge buy, which it was on Visa this week on Monday the 12th of $35 into Visa. Share price was at $259.95, and as you can see, Visa has run up to $266. Is no longer in the 250s, but I'm gonna continue buying. This is the weekly challenge for August, so I still have about two more buys, if I'm not mistaken, of Visa, and I'm gonna save up some money from today to also put even extra into Visa once again this week. I know I usually make about $10 to $15 purchases on the weekly challenge, but this one I'm trying to be bullish on. I'm really trying to build this position by continuing to buy fractional shares. And let's go into Warren Buffett's portfolio and the Q2 activity. And as you can see, this is no new news, which is he reduced 49% of his Apple holdings right there. He still holds 400 million shares right there. As you can see, Warren Buffett bought this, what was it, like 5-6 years ago or something like that. So he has very, very, very nice gains. And the one pick that I am interested in reviewing very quickly, which is a new addition to his portfolio in Ulta Beauty, ticker symbol ULTA, is only 0.10% of his portfolio, but it's still over 600,000 shares, over $260 million he invested in Ulta Beauty. So I wanted to take a quick look right here in Ulta Beauty. If we go into the overview, let's take a look at the year to date. It is down 24%, as you can see right here. And if we open up in the last 5 years, it's only up 10%. It's not even up by that much, only 10%. But year to date, it is down 24%, which it might be a good opportunity to start a position like Warren Buffett did, right? Market cap $17.45 billion. Look at the earnings per share, $25.61. PE ratio much lower than their EPS at a 14.28. So there's sign of undervaluation right there. And that's probably one of the signs that got Warren Buffett attracted into this company. Forward PE 13.92. So there's still some more undervaluation moving forward. The projected future growth, right? Analysts are calling this a buy, and at least Warren Buffett agrees. So I might agree also into this one. Revenue, as you guys can see, is continuing to grow. In 2020 is when they went down year to year 16% to $6 billion. But then they started growing into 2021, 2022, as you can see, 40%, about 40% year over year growth. And trailing 12 months is still over $11.2 billion, as you can see right here. But they're still expecting growth. Not as much as it has happened in the past, about 40 and 18% year over year growth in the past few years. But they're definitely expecting some very nice growth. And as you can see, let's take a look at the operating income. As you can see, from $351 million a year to $1.6 billion every year. So as you can see, the operating income just continuing to grow. And one thing that I really like about this company is that it's a share buyback machine right here. So they went from 57.8 million shares in 2019 to 48.7 million shares. So they've been buying back shares year over year, over pretty much over 3-4%, as you guys can see right here in the shares change year over year. So they have been buying back so many shares. And then their earnings per share, as you can see, is just continuing to grow to 25, as announced, $25 earnings per share. So this machine looks like a growing machine right here. This company, I'm sorry, it's like a growing machine. And the free cash flow, as you can see, let's take a quick look at the free cash flow chart. And they have been pretty steady. At over $1 billion in free cash flow, over $900 million right now, trailing 12 months of free cash flow. And if we take a look at the balance sheet and we take a look at the total debt, it is at $1.8 billion in total debt. So they have been pretty steady. I haven't seen that they are paying it off. I'm guessing they're using most of their cash flow to buy back shares, which is very nice too. But they also don't have a ton of debt. So they are able to pay off this debt in probably over a year, maybe a year or two, right? They should be able to pay this debt if they want to. But I like that they're investing right back into the company pretty much and rewarding the shareholders by buying back shares, as you can see. And if we go into the forecast, this company does not pay a dividend, so we're not going to go into the dividend tab. But as you can see, the analysts are calling this a buy right now. And if you guys see the average, what they forecast in the next 12 months is an average of $495 a share, which is a 35% increase, and then a high of $690 a share, which is an 88% increase. But if we go down and take a look at the revenue, it looks like the revenue, it will be growing year over year in the future, but they're estimating or they're forecasting over 5% growth, which is still good. That is still a very nice forecast right there. So it is interesting to me as of right now. It is not going to grow 40% like it happened from 2020 to 2021. But this looks like a very nice forecast growth right there. So it might be something, as you can see, the forward PE. Maybe if you buy it now, hold it for about 4 years, you get a 9.91 PE, forward PE right there, which is a very nice growth of your money right there. Leave me your opinion in the comment section of Ulta Beauty. I'm going to do a little bit more in-depth research into this company myself personally, because it's kind of looking interesting. Not only because Warren Buffett bought it, but I like their numbers. I like their growth. I was talking to my wife to see if, you know, it sounds like Ulta Beauty is very popular out there, and it sounds like it is. So that's just one opinion. Of course, I'm not gonna go by just that. I want to go by the numbers that they are sharing right here, and it's looking very, very attractive right now, Ulta Beauty. But I gotta do a little bit more research, and leave me your opinion in the comment section because I'm very interested about it. And then the other one is Bill Ackman buying of Nike. But let me take a quick look real quick. I just wanted to give my opinion on Chipotle Mexican Grill. I think this is a great move right here. Bill Ackman reduced by 22%. So he took some very, very nice gains, it looks like, here in Chipotle, because Chipotle to me right now, it looks overpriced right now. It's definitely overvalued. If we go into stock analysis tab, CMG, Chipotle Mexican Grill, as you can see, this is a $73.91 billion market cap. But look at that PE ratio, 53.09. Just only by looking at that, right? We got to take a look at more financials, numbers. We got to do a better analysis, right, before we make a decision. But that's pretty expensive for this Chipotle Mexican Grill. So taking gains right now, I think it's a very nice and smart move right there. If Chipotle goes down a lot in share price, I'll start thinking on adding maybe a position in there. Maybe I'll add a couple $100, right? Buy a couple shares, since now it's not anymore like over $1,000 like it was before. But a 53.09 PE, that seems very, very high. Even though the forward PE right now, it is a 46.18. Which is good, and the analysts are calling this a buy right now. I don't know. I think I will rethink that. I like Bill Ackman's move right here in reducing his position and taking a lot of those gains right there, which is really, really good. I like I don't know about this. He reducing Google 19%. That's a very big reduction right here. I believe in Google long term. I like, as you can see, he did GOOG 19%, and then he also reduced GOOGL 8%. I don't know. I really believe in Google long term. I like where Google is at right now, and it's gonna be one of my growth portfolio buys this week most likely, because I still like it where it's at. It's at a little bit over 160, so I'm gonna be buying some more. I believe in Google long term, so I don't know if I would have done this, but let's see if his move in reducing these positions, and I'm guessing opening some cash, right? This is just me assuming. I do not know what he did, right, or why he sold those positions, but he bought some Nike, which is a very interesting move right there. Over 3 million shares right there, over $229 million. And if we go into Nike, go right here into Nike. This is one that I don't know. I feel a little uneasy about this company right here. It might grow. It might do very, very well. And right now it is at $82.50 at the closing of yesterday, Thursday. But if we open up, let's open up the year to date. It is down 23%. So this would have been a nice time to buy Nike in the 70s. Since now it went up all the way to $82. And PE ratio, it is at 22.12. The earnings per share is at $3.73. And the forward PE, as you can see there, I don't know, 26.18. That means that it's gonna be I don't know. I don't like that. I don't like that. That the forward PE, they're not projecting very good future growth from what it seems like here. It's just gonna get more expensive, the stock, if it goes up in price. Analysts are calling this a buy. I don't know. Maybe in the 70s I would have bought it, but I don't know about right now. Revenue on this company, as you can see, is staying pretty flat, over $50 billion in the last 2 years. So it hasn't grown. It hasn't grown much, as you can see, year over year. It grew in 2021 to 19. It grew 19% year over year. Guessing right after the pandemic, everybody has stimulus checks, so they were buying a lot of Nikes, which it was, I guess, good for the company. But then it went down year over year growth of 4%, then 9%, and then pretty much the last 2 years or the last year has stayed flat. Pretty much in the trailing 12 months has been 0.28%, which is not much. Operating income, it has been pretty flat, over $6 billion in operating income. Last year it was, in 2023, $5.9 billion. And if we take a look, let's take a look at the shares outstanding. So you can see they're buying back some shares, not much, but they're buying back some. They went from 1.578 billion shares to now trailing 12 months 1.517 billion shares. So they're not buying back that much. Let's see, the earnings per share, it has been staying flat, over $3 earnings per share, which is still okay. I don't know. I gotta do a little bit more research into this company right here, but I feel uneasy. I don't know. One of my opinions is all that. All those stores that are just selling Nikes are like over $500. Those resellers, 500, 300, 400 dollars, and they're making a ton of money. I don't understand why Nike doesn't release even more sneakers, right? And I know Nike's making a lot of money on that, but I feel like they can make even more. Their running shoes market also, I think it has been affected a lot by other brands that are releasing more and more running shoes, and I think Nike has been going down in that. They're not focusing as much, but hopefully they do start focusing on that. Let's take a quick look at the total debt. This is one that I don't know. They're paying off debt, which is good. They went from $13 billion to $11.98 billion in total debt in the last 12 months. But I don't know about Nike. This one, maybe. It will probably do good. Dividend yield, as you can see right here, it is at 1.79. $1.48 per share per year. Payout ratio is only 39% that they're using to pay this dividend. So that looks okay. But I don't know. I don't know about Nike. I like the brand a lot. Trust me. I got many Nike things. I buy my kids Nikes and all that. But I don't know. Maybe it will be good to buy into Nike. And if we go into the growth portfolio, let's take a look. I know I talked a lot between those two picks. And I'm sorry, I usually like to show my dividend portfolio and my growth portfolio. As you can see, my growth portfolio is up 13%. As you can see, all my positions are in the green. VGT right now, it is up 19%. This is one of my favorite picks right here in ETFs for growth for the future. And I need to buy some more, but right now it has ran up to $571. But I'm planning on holding this VGT holding probably like 10 years before I even sell some. So I'm most likely going to be buying some today. And FNILX, I'm up also 17%. Tesla up 3%. I'm not buying any Tesla as of right now. Google is the one that I want to buy this week. It's at $161.30. My cost per share, $146. I'm only at 1.6 shares right now. So I'm probably going to be buying a little bit more Google today. I'm only depositing like $20 into this portfolio every week. So I'm thinking of buying like $10 into Google. Yeah, I think I'm gonna do that, and then I'll probably put 5 and 5 into VGT and FNILX. Amazon ran up to $177. I liked it under 170. I thought it was a nice opportunity to add some more Amazon, so I'm gonna hold on that one for now. I'm gonna put some more into Google as of right now, and just continue growing that position. I really like that Google position. My portfolio is at $1,400 right now, in the positive 13%, $166. I wish I would have money like the super investors, right, in the future. Not now. Let me make the mistakes now that I'm depositing very small into these portfolios, right? I make the mistakes now, small money. Hopefully in the future I have a lot more money into these portfolios that I'm able to maybe make better trades with more knowledge into any of these companies, right? And then if we go into my dividend portfolio, which is the one everybody comes to the channel to take a look at, let's take a look at the dividend portfolio, and it is in the positive by 9% in this position. And as you can see, it's almost all green. It's almost all green. Only Visa, which I'm sure you guys are probably surprised, like, wow, Visa is actually in the red. But it is one that I started adding around $270. So that's why I am in the red, which is exciting actually, because I get to buy more at a cheaper price. I'm at 2.6 shares already, and I want to end up this year at 4 shares at least. So I'm going to try to be more bullish into Visa right here. And I'm going to be buying some more this week for sure. My only other position that I'm going to be buying on today that is in the red is going to be Pfizer. I'm going to continue growing this position. It's at $28.71. My cost per share is at $32. I'm continuing to bring down my cost. I started this position around $35 when it dipped into $35. I think I should have waited. I didn't do, I guess, that deep of a research then. But I do want to buy and I do want to build Pfizer some more. 16.9 shares as of right now. I'm down 11% in this position. One position I'm in the green that I'm most likely going to be buying today is going to be Kenvue. I'm at 21.7 shares. I'm in the positive only by 2%, only up $10. But I want to see if I can continue growing this position. I would love to have 100 shares of Kenvue and just stop and leave it there. But I'm only at 21 right now, and I want to buy at least half a share. I want to buy today. So I'm probably going to put like about $10 into Kenvue. That's a company I want to continue growing. J&J is only up 1%, so it also calls my attention. It's under $160, which is what I like to buy. And I might buy probably a cup of coffee to 2 cup of coffees into J&J. $5-10, it should be okay to put into Johnson & Johnson. This is company that I really like, especially long term, very reliable, huge company. So, and I'm planning on holding for many, many years, hopefully into retirement. And hopefully this company continues to grow, right? And give me dividends in my retirement to be able to pay my bills. All Realty Income, as you can see, and Vici, both of them have run up in share price. Vici right now is at $31.76. My cost per share $29. 7% positive in the position. And All Realty Income is a $59 share price. My cost per share is $57. Performance, I'm up in the positive by 3%. If I have a cup of coffee into open, I'm probably going to put it into All Realty Income or Vici. One of the two, I'm going to put a cup of coffee into it, most likely. So I can continue growing these companies little by little, these holdings right here. But SCHD and VYM will be taking most of my money together with Visa this week. Those are going to be the three picks that I'm going to continue buying week over week as of right now. I'm gonna continue to compound these three positions right here. I do want Visa to be my top 3 or top 5 at least. This I want Visa right up here, right up there. Bank of America is doing very nicely for me. 37% in the positive, over 300% in gains. I will be selling in the future, but not yet. Let me continue to collect those dividends. I think Bank of America as of right now is okay, and I'll just continue to collect those dividends, reinvest them into another position like SCHD or maybe even Visa, and continue growing those positions and collecting that dividend. And then hopefully in the future, I'll sell it for an even nicer gain, maybe like a 50% gain or so in the future. As of right now, I'm holding. Alright everyone, please don't forget to hit the like button, subscribe to the channel, leave me your opinion in the comment section on those super investors picks. Do you hold them? Are you buying them? I'm really interested in Ulta Beauty. I'm gonna do some research this weekend and see. I am working on the spreadsheet that I'm gonna share, but I'm also gonna try to do some research. So I'm probably gonna work on the spreadsheet a little bit on Saturday. Alright everyone. I hope you enjoyed this one, and I'll see you on the next one. Thank you. Disclaimer, I'm not a financial advisor, and this is for entertainment purposes only. Please do your due diligence and research before investing in the stock market. Thank you.